and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host here for about the next 20 minutes here on Options Guide TV. All right, well, we had a very successful trading day on Friday. The UNH, I think, in hindsight, everything always looks wonderful. But in hindsight, the UNH trade was a very simple trade. The stock ran up. It was announced that Berkshire Hathaway was buying UNH, $1.6 billion worth. The stock opened up and then just kind of floated right where it was at and then closed right about where it opened. And that was perfect for a butterfly. The fact that the volatility just skyrocketed made the butterfly cheap, which doesn't usually happen in UNH. A little bit higher vol than normal, mainly because it's been in the news a lot. So that trade worked out pretty well. And if you closed it at 3 o'clock, like we talk about, you want to close somewhere between 2 and 3 o'clock when you're doing zero DTE options. It just so happened that the news happened on a Thursday. So you had all day Friday to trade those option contracts. So it ended up being a zero DTE trade, even though UNH obviously doesn't trade zero DTE expirations. But with that said, that trade turned out really well. It really depends on when you closed it. The market ran up a little bit, came back down a little bit, closed fairly close to the strike price that we put on. And it's as close to a home run as possible if you stuck in it all day long. And if you did stick in it all day long, you deserve the stupid award, because you're not supposed to do that. You're supposed to close it and not take the gamma risk of the zero DTE options at the end of the day. Talked about it a lot on Friday, that gamma, in the world of option trading, I think the biggest battle is always between gamma and theta. Gamma, you want that explosiveness. If you're correct on your forecast, you want your option contract to explode and the delta to go to 1 as fast as possible. If you're correct, just buying a call option, or -1 if you're buying a put option. Now, in the options world, though, you also want theta to be low, and you can't have both of them. So either you have a huge amount of theta and a high gamma, or you have a lower amount of theta and a lower gamma. So zero DTE is all about that. That's the game that you're playing. At one point in time, your theta is the main focus, and then all of a sudden gamma becomes the main focus. And that's especially when we're looking at, I think all strategies, I guess. It doesn't matter if you're doing a short spread, a butterfly, or buying a call option or buying a put option. That is the battle. So to try to battle that, put them on early, get out early. So put them on 10 o'clock-ish Eastern time, and then try to get out by the end of the day. So with this theme going on that we have here, we're running up to Labor Day, and we're going to do our own experiment in the SPX. Now, right now, the market, let's run to the Tradier Pro software. Let's do that. And we'll go back and review the other trades that we had on, but let's go and look at SPX, because we need to set up this trade. And as I mentioned, every minute that goes by after 10 o'clock, theta is rolling, and then gamma takes over. And so we want to get this trade on as fast as possible. The market is down 3. Our rule has been that if the market's down, we're going to do a zero DTE S&P 500 index butterfly, and we're going to make it open wing. So I started this one. It looks like the market's actually down. It was down 1 when I set it up. Now it's down 3, 146. So I got to adjust it. So when I started the trade was at 380. It's already at 415. All right, so let's adjust it. Let's make it at the money, and we'll call it a day, and we'll move real quickly here. So this will go down to, from the stop, we're going to go 55. Then we're going to go 45. And this would be 40. All right. That should do it. There we go. I like that price. The VIX is still low. VIX is trading right now at 1543. It's up just a smidge today. $15.15.43. This puts this at 340. That's about what we normally pay. So we're going to call it, let's call it 335, and that will be our screenshot. That's our official paper trade. You might try to work it at 330. If you were going to do it, I'd throw it in there at 330, see if it fills. If it doesn't, come back and give them the nickel. That's the way I would trade it. That's the way I would send it in. Not meant to be a recommendation. Obviously, we're just doing an experiment here. I always want to toss that out there. I don't know who's out there in webinar land. Got to make sure it's appropriate for you to be doing strategies like this. That's it. Send it to what if calculator, and that's going to be our trade. All right, so the bearish momentum has to continue. Now, the next trade that we want to look at is Home Depot. Home Depot is going to be announcing earnings. So with Home Depot, let's skip strike. Home Depot's interesting. Okay, so here's the chart in Home Depot. Well, actually, let me just kind of show you on Friday that the market went nowhere, right? So this is the SPX, and like I said, look at the range of the SPX. Oh, I'm sorry, the range of the SPX on Friday. That should have been Friday the 15th, right? And here's the 18th, okay? So just the market really didn't move that much and ended up closing down. And I think we had a bearish trade on. So I'll go back and review it and see exactly where it was at. And like I said, put the PowerPoint together for the holiday. That will be the show on the holiday. And that's what we're going to do. All right. So now coming back to not the SPX, we are looking now at, well, let's throw up UNH. Let's do UNH. Okay. And show you much the same there. We're up a little bit today, but once again, I think we're right around 304, 305, and that's about where it closed at. And I think it was 302 where it closed, but came up, ended up finishing up, obviously a white candle because of this huge move. But all the noise that was in this area of the chart kind of led to, gosh, why wouldn't we sell some vol premium here? And it's up further today. So we were actually bullish on our trade, and the market, I think, closed right, gosh, almost exactly on our strike on Friday. I don't remember where I closed it at. I had a limit order in. I don't remember exactly where it closed at this point. I should have looked at that before we started. Okay, so here we go. But I was able to execute it for very close to the price that we put on during the show. Home Depot. What if calculator? Home Depot long butterfly. This is the 29th, and this one is the 18th. Okay, so two ways to look at this one. If I look at the chart in Home Depot, they're going to be announcing earnings tomorrow. And so, yeah, this week we got a lot going on. We got Walmart, we got Target. Gosh. So tomorrow is Home Depot is the big one. We have Toll Brothers after the close tomorrow. We have Target before the open on Wednesday. And then we have Walmart before the open on Thursday. And then on Friday, we have BJ's before the open. So, yeah, it is retail sales week. And we will learn a lot about the retail customer. Another interesting one is TJ Maxx. TJX is going to be announcing before the open on Wednesday. And yeah, gosh, I think those are the main ones. So far, we got a couple of Chinese companies that are also going to be announcing this week too. So that will be very interesting week for earnings. Let's get back to the point. Home Depot, right in this area. Once again, a lot of noise. Look at how many times we came up to the 420 area and were denied, broke through, came down hard through that area, came back up, denied. So 420 is very interesting area on this, and that's about where Well, we're gonna have a tough time breaking through it, but if you do get the earnings catalyst and you break through the 420, then obviously 435, the most recent high, comes into play. So with Home Depot, if I look at our what if calculator, let's pull in Home Depot. And the 1 week trade, the Friday trade is 20 cents, which is about 4% of a 2.5 point wide spread. And you're making $20 on $2.50 worth of risk. And so you could either do that or potentially go out a little bit further. Well, this is the 29th. So let's go and do the 22nd. Yeah, I'm going to send it to the ticket. Now, this one should be 40 cents. No? Where is it at? Oh, now we're down 4. Okay. Well, we have to adjust the strikes. Let's adjust the strikes and expiration. Let's go out to the 22nd. Let's go 2.5 points centered around the 1 standard deviation move, which is 18 delta right here. So market has gone down since the beginning of the show. We're going to buy this one, sell 2 of the, can't do that many legs. I agree with you. We're going to buy this one, sell 2 of these, skip this one, and buy this. 25 cents. All right. I like that. You're bringing in about 4% on the risk. Home Depot's got to break through the 415 level. If we go to the charts, it's right around 420 is where that area is at. So 420 is the middle strike. And well, I guess that's the high strike. That's where our max risk would be at if it could break through that level. So a little bit of protection, maybe we get it. Maybe it struggles to get through that level. Just trying to sell it. I like the 25. We were here. That's just over 4% on the risk. It's going to be the official paper trade. We're going to go out to this Friday, August 22nd. We're going to buy the 18 delta, sell 2 of the 14 deltas, and then buy 1 of the 8 deltas here. Or you could say it with the strikes, 412.50, 415, 420. Doing this for a net credit of 20 cents. Well, 25. Gosh, it's moving. I keep it in at 20. There you go. Boom. Let's do 20. We'll call it 20 cents. That's 4% then. We're going to keep it right there. At a limit price of a 20-cent net credit to the account, you're going to have $250 worth of risk, which is the skipped strike from 114.50. That would be the normal butterfly. We're going to skip that and buy the 420. And yeah, and see what Home Depot does tomorrow. Now, the downside of the skip strike, I would like this, if we could get this done for 20 cents and they announced on a Thursday, that would even be more wonderful. But now we got, if it opens and continues on up throughout the week, so you have all day Thursday, all day Friday, all day Tuesday, all day Wednesday, all day Thursday, all day Friday before the expiration date. So that makes it a little bit tougher in this scenario. Home Depot is a little bit elevated, but it always trades at a little bit more of a premium than Lowe's, for example. If you want to be a PE trader, you'd be going over to Lowe's as opposed to Home Depot. But the duopoly, the solid company across the board. Home builders are down a little bit, but a lot of people will say that Home Depot, they'll make that argument that they do well. Home builders are doing well, and they also do well when they're not, because that means people are updating their houses and they're not switching them or flopping them or whatever you want to say. All right, that's it. Any questions that we have for this show? We got a comment. Okay. Good morning, Kurt. Thanks for popping in. Any other questions on the trades? We're at 11:18. Short and sweet this week. Target's going to really affect Walmart. Well, not really. Target, the biggest thing about Walmart is they're becoming more and more of a grocery store than they are a retailer. And so they're their own beast at this point in time. Target's really struggled, and they had a few downgrades this week. They're still trading at a decent valuation, and net margins aren't bad in Target. But when it really comes down to it, I don't know. I'm a little bit more neutral on Target this week than opposed to let's jump all in. But if you look at the valuations, Target has a strong case for the potential to blow earnings away, and they would have to blow it away. If they did, Target would get rewarded. In this day and age with a lot of the tech stocks, if they blow earnings away, they've been taken as an opportunity to sell and collect profits. But that would not necessarily be the case in Target. I think Target, if they blow earnings away, that's an opportunity to get the stock moving on the positive direction. So that's what we're going to do. Very interested in that one, but Home Depot tomorrow. This is our trade. Thanks for stopping in. And we'll see you this Wednesday for the next edition of Options Guide TV, 11 a.m. Eastern Time, every Monday, Wednesday, and Friday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.